Warren Buffett recently sold half of his Apple stocks, causing quite a stir in the financial world. In this video, we're going to look at this move through the lens of economic and political factors, specifically focusing on US-China relations and currency fluctuations. So, why did Buffett sell such a large portion of his Apple shares? And what does this mean for Apple and its investors? In this video, we'll explore how the broader economic and political context, particularly the tensions between the US and China, can impact Apple's business. We'll also look at how fluctuations in currency values between the US dollar and the Chinese yuan might affect Apple's profitability and pricing strategies. By understanding these factors, we can get a clearer picture of why Buffett made this decision and what it could mean for you as an investor. Let's break it all down and see what insights we can gather from this major move. Let's start with a bit of history on Warren Buffett's investment in Apple and why it's such a big deal. Back in 2016, Buffett surprised a lot of people by investing in Apple. This was unexpected because Buffett had always been cautious about tech stocks, saying he didn't fully understand them. But Apple was different. He saw it not just as a tech company but as a consumer products company with a strong brand and loyal customer base. Over time, he kept buying more shares, and Apple became one of the largest holdings in Berkshire Hathaway's portfolio. To give you an idea of the scale, at one point, Berkshire Hathaway owned over 5% of Apple, which was worth more than $120 billion. Apple contributed significantly to Berkshire's earnings, and it was considered a cornerstone of their investment strategy. So, when Buffett decided to sell nearly half of his Apple shares, it definitely raised some eyebrows. According to the Wall Street Journal, Buffett's Berkshire Hathaway sold about $75.5 billion worth of stocks in the second quarter of this year, including nearly half of its giant Apple stake. This sale helped boost Berkshire's cash reserves to a record $276.94 billion. This wasn't just about Apple. Berkshire also trimmed its holdings in other companies like Bank of America. Buffett mentioned that the stock market is currently very expensive, with the S&P 500 trading at around 21 times its projected earnings, compared to the historical average of about 16 times. This high valuation makes it challenging to find good investment opportunities. By selling Apple and other stocks, Buffett is taking profits and holding cash, waiting for better opportunities to invest. In summary, Buffett's significant reduction in Apple shares is part of a broader strategy to manage risk in an overvalued market and to prepare for future investment opportunities. Understanding this background helps us see why this move is so noteworthy and sets the stage for analyzing the economic and political factors that might have influenced his decision. Now, let's talk about US-China relations and how they play a crucial role in Buffett's decision to sell half of his Apple stocks. The economic tensions between the US and China have been a hot topic for the past few years. We've seen trade wars, tariffs, and other economic policies that have strained the relationship between the two largest economies in the world. For instance, the trade war that began in 2018 led to the US imposing tariffs on Chinese goods, and China retaliating with tariffs on American products. These tariffs impacted various industries, including tech companies like Apple. For example, components that Apple uses in its products became more expensive, which could either increase production costs or force the company to pass these costs onto consumers, making products more expensive. The political climate between the US and China also significantly influences business operations. Take the Huawei ban, for example. In 2019, the US government placed Huawei on an entity list, effectively banning American companies from doing business with it. This move not only disrupted Huawei's business but also had ripple effects across the tech market. Companies that supplied parts to Huawei saw a drop in demand, and there was increased uncertainty in the tech sector. Now, how does all this affect Apple? Apple relies heavily on China for manufacturing. Most of its products, like iPhones, iPads, and Macs, are assembled in China. This dependence means that any disruption in US-China relations can have a direct impact on Apple's supply chain. For instance, if the US were to impose more tariffs on Chinese goods, Apple might face increased production costs. Similarly, if China were to retaliate by imposing tariffs on American products, Apple could see a decrease in its market share in China due to higher prices. Moreover, Apple has a significant market share in China. The Chinese market is the second largest for Apple, after the US. Economic policies that affect consumer spending in China can directly impact Apple's sales. For instance, if the Chinese economy slows down, people might spend less on high-end electronics, affecting Apple's revenue. Adding to this complexity is the recent move by the Chinese government to ban government officials and employees of state-owned enterprises, SOEs, from using Apple products for work. This ban is part of China's broader strategy to reduce reliance on foreign technology and enhance cybersecurity. Given that a significant portion of the Chinese workforce is employed by the government or SOEs, this ban could significantly impact Apple's sales in China. For example, if millions of government and SOE employees are barred from using iPhones, Apple could see a notable drop in demand. There are also potential regulatory hurdles. China has stringent regulations, and any changes could affect how Apple does business there. For example, stricter data privacy laws could impact Apple's services like iCloud, which relies on user data. In summary, the ongoing trade tensions and political climate between the US and China create a volatile environment for companies like Apple. These factors contribute to the risks that Buffett is managing by reducing his stake in Apple. By understanding these economic and political dynamics, we can better appreciate why such a significant sell-off makes sense in the current climate. Let's talk about how currency fluctuations between the US dollar and the Chinese yuan can impact companies like Apple. Exchange rates play a crucial role in the profitability of multinational companies, and Apple is no exception. First, let's understand how exchange rates affect businesses. When the US dollar strengthens against the Chinese yuan, Apple's products become more expensive in China. Imagine you're in China and want to buy an iPhone. If the dollar is strong, you'll need more yuan to purchase the same iPhone, making it pricier for Chinese consumers. This could potentially reduce demand because fewer people are willing or able to pay the higher price. We saw a similar situation in 2015 when the dollar appreciated significantly, and many US companies, including Apple, reported lower revenues from their international operations because their products became more expensive overseas. On the flip side, if the dollar weakens against the yuan, Apple's products become cheaper for Chinese consumers. This can boost sales because the same iPhone costs less in yuan. Moreover, when Apple converts its revenue from yuan back to dollars, it gets more dollars for the same amount of yuan, increasing its revenue. For instance, in 2017, when the dollar weakened, Apple saw a boost in its revenue from international markets. Now, let's discuss how these fluctuations impact Apple's profitability and pricing strategy. Apple constantly monitors exchange rate movements and adjusts its pricing strategy to maintain profitability. For example, if the dollar strengthens, Apple might decide to keep prices stable to avoid losing market share, even if it means taking a hit on its profit margins. Conversely, if the dollar weakens, Apple might choose to lower prices to increase market share while still benefiting from the favorable exchange rate. In the past, Apple has made several adjustments due to currency changes. In 2016, due to the strong dollar, Apple raised prices in some international markets to offset the currency impact. More recently, in 2020, Apple adjusted its pricing strategy in several countries to account for local currency fluctuations, ensuring it remains competitive and profitable. In summary, currency fluctuations between the US dollar and the Chinese yuan significantly impact Apple's profitability and pricing strategy. A stronger dollar can reduce demand in China by making products more expensive, while a weaker dollar can boost sales and revenue. Apple continuously adapts its pricing to navigate these challenges, ensuring it remains competitive in the global market. Let's talk about what all this means for investors. Economic and political factors between the US and China play a huge role in shaping investor confidence in companies like Apple. When tensions rise, like with trade wars or bans on technology, it creates uncertainty. Investors don't like uncertainty because it makes it harder to predict how companies will perform. For example, when the US imposed tariffs on Chinese goods, it didn't just affect Chinese companies. US companies that rely on China for manufacturing, like Apple, also felt the impact. The costs went up, and there was a lot of concern about how it would affect profits. Similarly, when China banned its government workers from using iPhones, it signaled a potential decrease in demand for Apple products in one of its largest markets. These kinds of factors can make investors rethink their positions in companies with significant exposure to China. If you're holding Apple stock and you see these geopolitical tensions escalating, you might worry about the long-term implications for Apple's business. This can lead to selling pressure on the stock as investors look to minimize their risk. Now, let's consider Buffett's perspective. Warren Buffett is known for his cautious and calculated approach to investing. He's always looking at the bigger picture and how macroeconomic factors might impact his investments. The ongoing uncertainties between the US and China, such as trade policies and regulatory changes, likely influenced his decision to sell a significant portion of his Apple shares. By doing so, he's managing risk and preparing for any potential downturns that these factors might cause. For individual investors, this highlights the importance of considering macroeconomic factors when making investment decisions. It's not just about looking at a company's financials or its products. You also need to think about the broader economic and political environment. Ask yourself questions like, how might global trade policies impact this company? Or, what are the potential risks from regulatory changes in major markets? In summary, economic and political uncertainties between the US and China can significantly influence investor confidence in companies like Apple. Buffett's decision to sell a large portion of his Apple shares underscores the importance of considering these macroeconomic factors when making investment choices. By staying informed and thinking about the bigger picture, you can make more strategic decisions for your portfolio. To wrap things up, we've covered a lot about Warren Buffett's recent sale of Apple stocks. We looked at how US-China relations, with their trade tensions and geopolitical issues, impact Apple's business. We also discussed how currency fluctuations between the US dollar and the Chinese yuan can affect Apple's pricing strategy and profitability. These economic and political factors play a significant role in shaping investor confidence. Buffett's decision to sell a large portion of his Apple shares highlights the importance of considering these broader macroeconomic factors when making investment decisions. Thanks for watching.